Yeah, you know, when you're investing, you want to know what you're buying, right? Oh man, the market's crapping out. Ah, I told you that story. I'm not gonna let my friend forgive this. The market's open, by the way. Um, that I was short earlier. I thought we kind of puked during the opening, um, so I shorted a little bit. And my friend texted me and he was like, "No, man, I think the market's going up." So I got out of the short and went long, and now the market went down as soon as I went long. So, and our little Microsoft investment is not going well either. So I just made this account just so you guys know I'm getting into a trading competition. It starts Monday with this guy Matt Kors. So he challenged me. So you know how I am, stubborn. I'm not even a trader really. I'm an investor, but he challenged me, so I decided to show him that I'm
At
gonna
32, which is just over
own him.
100% gain to also cover commissions. And that's my reasoning for it. It looks like it's going to get filled. We're right now at a
See,
72%
everyone's
gain. If
bearish.
we hit 370,
Look at how everybody's bearish. 73% of his viewers who are all idiots. I'm kidding. I'm kidding. Uh, are bearish, right? Red, red. So that means it's going to go green. 28%. Only 28% are saying green. So that's what's going to happen because everybody's. I'm even more convinced now. Uh, I switched my position not because I just listened to my friend, but I listened to him and I was like, yeah, you're probably right actually. Um, so the fact that everybody's bearish is usually the best time to buy. So let's buy some more. What do you guys think? Yeah, yeah, let's buy some more. Let's go crazy. I'm kidding. Let's not go crazy. Let's double the position. Usually trading, when you trade, doubling down is like the worst thing you can do. It's usually really stupid. Um, but in this case, we're going to
Order
try it
filled.
once. And then what we're going to do is if it drops below a certain level, we're going to get out. So let's say 372.78 is the last buy. So let's say 372 flat, we're get out. Maybe 370, 372. Let's see. You know what? Let's try this. Let's go to Excel. I'm just going to use this as a scratch pad real quick down here. Let's say 372 times 0.995, so that's a loss of 50 basis points. So that would be 370. All right, at 370, you know, we're just going to get out. 372 even Steven is probably too small, but 370 will get out. And the idea behind that is sometimes called the stop loss. The idea is that if you make a position and you're wrong, at some point you should just give up and admit that you're wrong. So we're going to set that point ahead of time, and we're not going to change that. So at 370, we're out no matter what. And I'm not going to actually program that in, which you could do. You could just click and create stop loss. But we're just gonna watch it manually. But it's better when you click it in and you force it to sell you out if you lose. So anyway, we're not gonna watch that too closely. I think traders who watch their screens too closely are, I mean, it's not a bad thing to watch your screens. It's just if you're a day trader or something like that, you kind of have to. But if you're a more cerebral, slow investor, that's different. So anyway, let's get back to Microsoft real quick. Yes, I'd like to see this document. Thank you. Like I said, you can just drop all these things in really easily now that you built the model. Everything will flow quite quickly. In fact, if I did this side by side, you'd see how fast I could do this. It's remarkably quick. And if you use the number pad on your computer, you can really do a lot of damage. I had a keyboard that didn't have a number pad, so I changed it out for this one. But you can see that took about 5 seconds, would you say? You want to time it? Ready, set, go. I'm not going to try to go fast on purpose, but because you're supposed to actually kind of go slow and look at the numbers and try to understand them as you're typing them in. That's part of the reason I do this and I don't try any automated thing. Also, there would be no way to do it in an automated way, but that's a whole other story. But yeah, you can see, okay, so that's the end of the time. So I don't think that was even 30 seconds. And so 22% growth in Q1, then 20% growth in Q2, then 18% growth in Q3. What do you notice? It's just kind of slowing down, is the trend. But that's still very, very rapid growth for such a large amount of revenue. It's hard to grow businesses a hundredth of this size. So 50 billion in revenue a quarter is quite hard to grow. So really impressive growth by Microsoft. And none of this is really fueled by any acquisitions. It's kind of impressive. All right, let's go to the balance sheet real quick. Same concept. It's a little less quick because of most of the lines are inputable, or values, not formulas. More technical, I guess. So there's all kinds of analysis we could do with inventories and accounts receivable, but we're not going to. Not that important right now. PP&E, one of the most important concepts I would say in business, property, plant, and equipment. Companies call it different things, but I call it PP&E, property, plant, and equipment. All right, and that's it for the asset side of the balance sheet. Now it has to balance, that's why it's called a balance sheet. It's to balance with the other side, with the liability side. These are also balances of accounts, so you could think of it as that too. It's not just the balance sheet because it balances. All right, there's the debt, compensation, taxes. There's a bunch of tax lines, so you got to get them all. There's 1, 6272. There's 2, 25715. And then there's deferred income taxes. There we go. Now there's deferred revenue, 2550, 38465, the all-important deferred revenue. It actually looks like deferred revenue just dropped over the last few quarters, which is not good for Microsoft at all. That might be seasonal, but that's not good. Maybe I should sell my stock. Let's do a little more. Other current liabilities, 10816. Leases, 10050. 14346. 151,978. Okay, balance sheet balances. You can see the liabilities and shareholder equity equals assets. If you don't know what that is, it's a good time to learn. Very important stuff. Now let's go to the cash flow statement. Some people say the cash flow statement is the most important statement. Again, it's a lot of people think of the cash flow statement is much more. Now here's revenue recognition goes out the window. This is all about how much cash came in your doors. So this is like if you had that bookstore or that t-shirt store, this is exactly kind of how you would think about the business, where it's the cash you received is what counts, not the accounting gibberish. And which one's more important, you might say? Well, they're both important. The accounting system makes sense. It's not just made up and a waste of time. It does make sense. It's just a matter of kind of understanding both of them. All right, so let's look at this. This is called capital expenditure, very important concept. CapEx is anytime you buy some PP&E, that's what CapEx is. All right, there's an acquisition here. Every quarter, Microsoft buys some company. Usually quite a bit of them, quite a few of them. All right, so we got CFFI, and now we're going to do CFFF. Repayments of debt. Common stock issued. Common stock repurchased. Dividends paid. 72. Okay. 73. Cool. Everything fit. So again, I'm going to do this, not FX, free cash flow. So I'm going to take you know what, I could just take the average of these three and then multiply by 4, and I get 63 billion. So again, I got 63 billion. So 29 times enterprise value. It's not that attractive, even if it is growing 20%, because let's take that by 20%. So for next year, oops, let's do that. So that's 24 times kind of for next year. It's still a fast grower, but let's say that the growth declines perhaps to say 10%. Talking about 22 times 2 years from now. Microsoft's kind of like this indestructible fortress of profit. just not that exciting of a stock to own. I think those stocks we want to have in our portfolio kind of want to be exciting stocks. So let's sell this Microsoft. And I want to show you something. When we sell this Microsoft, click sell. I'm just going to do a market order. It's only 5 shares, so who cares? And let's see, the market is around 24.8, 248.80, 80 something. So we just sell.
Order partially filled.
And
Order filled.
it got filled at 248.83. Maybe not the best execution, but regardless, so we lost $23 on Microsoft. Or no, there should be some realized loss. Okay, we lost $11 and 30 cents. It looks like. Let me add a column here. Insert column. Position P&L. Realized P&L. There we go. All right, so we lost $10 on Microsoft. So again, this is a really small account. It's $50,000. So it's again, this is my account to compete with Matt Kors. It's not my normal account. So anyway, the key here is that I bought this Microsoft with partial information, and I did this on purpose. Even though it was a loss, I kind of wanted to show, it could have easily been a gain as well, but I wanted to show you a method in trading that's really important, which is basically that if you do an analysis where you end up changing your mind, which traders have to do every day, it's really, really, really important to quickly change your position. A lot of people, when they get new information, they want to stick to their old opinion because it feels better. Am I short Microsoft? Ooh, shoot. Put 100 shares, right? Oops. Thank you. That was a mistake. And of course it went up. I thought there was something wrong. Let me make a new column here. Well, let me get out of it first. That's the key. When you make a mistake in trading, that's the other important thing to do. Thanks for pointing that out.
Order filled.
Okay, now I'm out. So I lost $62, $61. The $50 came by accident. The $10 was intentional. Oh well. Anyway, point is, it feels much better emotionally and mentally to try to kind of convince yourself that you're right. And that's maybe the way most financial mistakes are made. And I know that sounds crazy, but it's true. So many financial mistakes are made that way, where people just don't want to admit they're wrong. If you get some new information, for example, you're convinced that, I don't know, let's go to the t-shirt store again. You're convinced that the t-shirt store stock, wow, t-shirt store stock is a great investment. For whatever reason, you think it's a fantastic investment. And you buy stock in this t-shirt store. And the reason you think it's a great stock is because you like the CEO. And then the CEO resigns. And then you don't sell your stock. You say, you know what? I like the t-shirt store stock anyway because the revenue is growing so fast. And then it's like, okay, well, cool, I guess. But then you also see the next quarter the revenue isn't growing fast. And you say, well, I like the t-shirt stock for the long term. It's like you keep changing your mind, and it's the worst thing a trader can do. It's sometimes called thesis drift in the industry. Thesis drift. So with thesis drift, you have a big risk of just constantly wanting to prove that you're right because you don't want to admit. And this could be psychologically, it's a really small market cap. I'm not going to look at this one. This could be psychologically, you could be aware of it, or it could be subconscious.